Hey guys, we're going to kick things off going through some recent news today. So this news just came out for XRP. So we have this startup called Receipts Depot, and they are a startup founded by city execs or city alumni to launch XRP-backed securities. So today they already offer Bitcoin and Ether-backed securities, and now they're looking to get an XRP. So what's cool about this is similar to ADRs or American Depository Receipts, which basically allow investors to buy foreign stocks, imagine buying Toyota, without going through the foreign exchange. So what they're doing now is there's going to be XRP DRs or XRP Depository Receipts. So these are going to represent ownership of XRP, allowing investors to get exposure to XRP without buying it directly on a crypto exchange. So we can see former Citigroup executives, the firm already offers these products, and the offering will be available to qualified institutional buyers only. And right here, this will give institutions access to XRP securities through US regulated market infrastructure. So this is a really good thing. This is likely going to happen to many other projects in the future, especially the top ones. This product will be offered to qualified institutional buyers only via transactions exempt from registration under the Securities Act of 1933. So, therefore, it does not need approval from the SEC. And the securities will be cleared by the Depository Trust Company, similar to their other existing offerings for Bitcoin and Ethereum. So the founder and CEO of this company, this Receipts Depot startup, explains the benefits of this, meaning the tried and true structure providing direct ownership of the underlying asset and easy inclusion in institutional products. And this is exactly what's needed to bring the institutional crowd to the crypto space in traditional finance. There are trillions of dollars. So we know that spot ETFs are a spot XRP ETF. Even the spot ETF for Bitcoin, it does require real Bitcoin, but when you're owning that, you're just owning the share. So you actually are not owning the underlying asset itself. However, with a depository receipt for Bitcoin, Ethereum, XRP, you would actually have direct ownership of the crypto asset. So I think it's already well known that institutions have been here for years, literally buying Bitcoin since 2017, 2018, and that's proven, but I also want to emphasize that institutions aren't really here all the way, so they're still coming. And all of these tools, all of these financial products, XRP depository receipts, tokenized T-bills, all of these are a step in the right direction, but this is just the beginning. I really just think of all of this as another bridge. So the bridge is getting bigger and bigger, and the bigger it is, the more value can flow through. Alright, so really quick, because we did get a new blog just referencing the older article with Ripple and Medico back in the day, just talking about the growing institutional crypto custody market is expected to reach a staggering 10 trillion by 2030. So this is the institutional crypto custody market. And this came out by Ripple 2 days ago. So right here we have the custody services market is expected to grow from 41 billion in 2023 to more than 100 billion by 2033. So this is the overall services market for custody. This is not referring to institutional crypto custody, which is 10 trillion. So this estimate was actually referenced to this link, and they link it right to this report for $4,000. So pretty much with everything happening, the crypto custody market expected to grow and services in that market expected to grow. Digital asset custodians are extremely important, including Ripple Custody. Especially considering more than 10% of the world's assets are expected to be tokenized by 2030. So definitely keep an eye on Ripple Custody before they even put Medico under their umbrella. They're working on some really big things. We can see customizable control over operating and security models, including flexible deployment or management of private keys. So Ripple Custody supports live commercial custody offerings in 20 regulatory jurisdictions. And global custodians are primed to capitalize on the emerging trillion-dollar opportunity. So when I click that, it takes me to this CoinDesk article back in June, and we can see crypto and artificial intelligence could be a $20 trillion megatrend. I try to remember a lot of these numbers. Sometimes it's easier, especially if I repeat them, but bottom line, when we think about the potential long-term of crypto and AI, it's in the trillions, significantly bigger than where we're at today. Alright, next up for API3. So this is a microcap. I think it's really dependent on Ethereum rising, including DeFi. So I think DeFi going up would be a good thing for API3, even Chainlink in the Oracle space, if Chainlink starts moving. I've explained in previous videos expectations for alts right now really dependent on Bitcoin and Bitcoin dominance. I keep tabs and they do seem busy. They have over 190 plus data feeds, a bunch of networks, and you can always learn more at api3.org. You can go right to developers, check out the data feeds, then you can go for data providers and check out Airnode. Another impressive thing to check out is the API3 Alliance. So I've referenced this a bunch for years, and they do have a really big list. Load more. I mean, this just goes on, and I believe they should still have, let me find the group, Hopefully you can see up here, I'll try to zoom in. We still have at the very top, alphabetically, I didn't need to scroll down, we have AccuWeather. And just a couple quick points. So last year, they announced this, the OEV network, the ZK rollup to capture all Oracle extractable value, so OEV. And you can follow OEV network right on Twitter, Oracles that pay you. And this is all recent right here, so they have Lendl, one of the early adopters, as a top lending protocol, is using the first proven scalable OEV solution to turn liquidations into a new revenue stream. So this has been somewhat of a problem in DeFi, so I'm going to explain a bit more. And this would be really cool if API3 and OEV network could solve this problem. We have right here, I'm going to pronounce it Yay Finance, as the largest lending protocol on Say network. Yay is turning volatility into revenue with OEV network recapturing the MEV that would otherwise be lost. So MEV stands for maximal extractable value. So this is a major issue in DeFi, basically, where block producers, validators, they manipulate transactions to extract extra profits. So because of this, and when this does happen, this can lead to higher costs, really unfair trading, inefficient markets. And this is one of the main things that API3 is really trying to solve with their OEV network, so aiming to redirect the MEV profits back to users and protocols to make it more efficient in DeFi and a lot more fair. So this is a really interesting use case, and it's absolutely necessary. MEV issues in DeFi continue to be a big problem. And in the future, when DeFi does go into new all-time highs, I think that this could be a really big narrative. So I just wanted to quickly go over that and go over MEV and the OEV network. Basically for API3, my thoughts are when Ethereum dumps, API3 dumps, we're drawing a type of spring. I mean, we could look at the fibs and say, oh, is the bottom in or is the bottom 40 cents? Either way, I'm awaiting for next cycle because when Ethereum goes up and finally rises, I'm very bullish on API3. API3 has always been volatile, so I never rule out just a really strong V-shaped recovery, I just don't know when. And here we're on DeFi Llama, so this is the TVL today of all of these chains, Ethereum, Solana, SWI, etc., over $100 billion. So our all-time high was way back here, closer to like $175 billion. And we can see the dump that we had recently. So after the bear, we've definitely recovered. To me, I think we're just kind of drawing waves. So on this YouTube channel, we watched the advent or the beginning of DeFi. We saw dexes like Uniswap, SushiSwap, we saw Chainlink and Oracles, and then from there, there's more use cases that have been created. There's more efficient AMMs, there are new staking solutions, liquid staking, even more narratives around parallel transactions in the parallel EVM. I think that's still going to be really big in the future. So really just zooming out and looking at this through the perspective of a giant tech shift. I mean, years ago, we were at absolutely nothing, $400,000. Now we're over 100 billion. So I believe in the future, we're going to surpass 1 trillion. And one other thing that I find helpful is right on DeFiLlama.com, you can come down and click Oracles so we can see a list of Oracles. And I know that API3 with OEV network is the Oracle that pays you. API3 is really a DAPI, a decentralized API. So we can see the names of these different projects, these in quote oracles, Chainlink, we have Pith Network, we have API3 down below, and we can see the TVS or total value secured. So this would be a good number to keep tabs on if you're seeing it grow or go down. I just think there's a really obvious correlation to total value locked in DeFi, so when Ethereum goes down, TVL goes down, and then it's going to affect everything else, and vice versa. When it goes up, that's good. And to keep this as simple as possible, oracles are really important because what they do is they're actually bringing real-world data on-chain. So on-chain onto these crypto networks and right into DeFi applications. So by doing that, you're providing price feeds, real-time information, external data for smart contracts to function. So without oracles, how would we actually bring real-world data on-chain? There would be no interoperability, there would be no true data to make decisions even for smart contracts. So I can't emphasize enough that oracles are extremely important. I know that they might not be the sexiest use case, but they have such a big place in crypto and are really helpful because they power DeFi completely for lending, trading, derivatives, and they also enable real-world assets, so the tokenization of RWAs on-chain. And just thinking about how important oracles really are for supporting insurance, gaming, allowing smart contracts to execute and make decisions based on real-world events, making sure that that data is accurate. Because if that data is fake or it's just slightly off, it can mess everything up and there's a big chain reaction. So it's really important to have very accurate, scalable, quick, reliable, trusted oracles. I know that's a long sentence. So we'll finish up with this. I posted this back in December, so imagine a future where DeFi TVL between all chains surpasses over $1 trillion. So there are so many use cases that DeFi can bring, and Oracle's is just another part of it. Think about enterprise DeFi, tokenized assets, on-chain derivatives, we know how big that market is, decentralized lending and borrowing, cross-border settlements, insurance protocols. There is so much money in insurance. We could talk about the metaverse, gaming, DIDs or decentralized identity and verifiable credentials. So that all plays a role in DeFi. Energy markets, carbon credit markets, whatever other narratives are going to grow. We could talk about machine to machine and IoT devices and play to earn. It just goes on and on. We'll actually finish up with this. So going over DePIN, and this is a Messari report that came out. This was shared back in December, but I think it's relevant. So DePIN stands for Decentralized Physical Infrastructure Networks, a bunch of crypto use cases. And this Messari report did point out several protocols generated 7-figure and even 8-figure revenues over the course of the year, showing initial promise of DePIN capturing the demand side, which has constrained growth so far. So I'm excited to keep track and see if the DePIN sector this year in 2025's revenue is going to surpass 150 million. Alrighty, so I hope you guys enjoyed today's video. There are so many other things I still need to go over, but thank you so much for watching, and a huge thank you to all that hit the like button, and I will catch you in the next one. I'm losing my voice. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.